So Boeing was the next one.
Correct. Ticker BA.
Let's take a look at the pictures first. You know, Boeing lives at the Heartbreak Hotel. It's so true. They disappoint you if you're short, and they disappoint you if you're long. It doesn't matter what you're doing.
Big old batch of disappointment.
Yeah, they really are. So here's what's going on with them. We know they've tried. They're turning around their senior leadership. They're trying to do a lot to get these planes out, but they really are dysfunction. They're a measure of dysfunction. The reason these guys stay in business is the same reason Kodak does. They got all kinds of black ops stuff that they do for the government. And so the question is, are they really turning around? And so someone enthusiastic could say, wait a second, take a look at this. This looks like a really ugly potential head and shoulders pattern. And we could have ourselves a pretty nice run to the upside based on these earnings. So what would a pretty nice upside be? If I look at, let me first clear out these drawings. Yes. And then, oh, look at that. This was a pretty big move off the earnings. It went right down into 200% retracement. I think 195 is a pretty nice target.
Okay.
Right? So if we're thinking both sides of the equation, I don't know. But with them, they surprise in bad ways all the time. So I'm going to look at 155 and then 195. And let's see. Let's go to Fed. Okay, we're out of these. Okay. Ooh, the 155 is only 95 cents, but there are a lot of options there. All right, so let's go 160. Vol is not very high here. So if per happenstance we kept the original strike and we did 155 to 145 to 135, 50 cents, $1,000 upside less what you pay for it plus commissions. That would be downside. If it went upside, got 9,000 contracts at 177, 195. This one might be more expensive. 205, 215, $100. But again, you could sort of, when is the earnings event?
For Boeing?
Yes.
Let me get that for you here real quick. That is going to be 7 days from now before the market. Yes. So January 28th, Tuesday in the morning.
Yeah. Again, lowball it. Say to yourself, you know what? I'm not going to spend more than $100 on this trade. If you look at it that way and you go, okay, I'm going to try to get one at 50 and the other at 50, or I'm going to try to get one at 48 and the other at 48 and cover all my commissions. If to make it $100 is all I'm spending. That is a fair estimation of what could occur. Now, if per happenstance, it gets a little, no, much more expensive. Yeah. So we'll leave it right there. I think February is going to be very interesting. You know, January, we did not have a very dramatic OPEX. I thought we would have a lot more volatility, but we did not. And so we still have chances for February and March volatility, but these butterflies, as long as we position it in the right space, these butterflies, they're going to print cash if we have a good jolt of motion. You know, I'm a little bit like Redler in the fact that my sense of how earnings are going to respond really have me just putting out a few lottery tickets and waiting until after the earnings to see what the risk events look like. So I do like this one, though, because it's cheap and we are seeing that it's been in a rotation that's holding these levels, right?
Yeah.
And even if it
Yeah.
does go to just 197, we're still $2 in the money for 195 and we double our money.